All right, this is something well, not unexpected, but futures did have a nice push. 42. Why did they push up till 42? Let's figure that out. Uh, 42.60 was there, and 42.45 was there. 42.35 was there. None of that mattered, and nope. I don't see any good level. Why futures pushed from 42 until it's just a psychological level, 41.94 perhaps. That would have been nice. But all right, so let's see. Futures for what we'll figure out the reason later. But futures hit that 42 threshold and started pushing down, and then again pushed up into the super trend, then coming down. Now it's coming down, but to what extent will it go down? Let's figure that out. Uh, right here, if it's breaking, if it starts to push below here, then we are looking for a good push into the 50 on the 1 hour. 41.25 is where I'm sitting for futures. To the downside, that's my base case. Uh, Not in a straight line, perhaps not in a straight line, but we don't really know. We don't still understand why the futures are pushing down. Maybe there's a good enough reason, like Al mentioned, that Japan's factory output is slumping. That means demand is coming down. So that we need to take that into consideration as well. So, however, the you could make an argument right here. Right? This is pretty oversold. This region was pretty oversold all the way through here. It had to come back in. That's what is happening. Break of 5, 8 mean, and then we gotta go push into perhaps this number. 41.25. That's my base case to the downside. If we break below there, then we are pushing into 40.44 or something like that. Right here, 40.43, 40.44. That's the number. I don't believe if we can go down that far, we're gonna stop here. Most likely, we'll push into the 200, which is about 39.90. So most likely this is the case if it happens to the downside. But for now, I am charting till 41.25, not charting anything below that as of now. So if we just break below there, then we're looking for a push into the 100 moving average around 40.40. And to the upside, these dots right here. So the upside here, you can make an argument that 41.80 is the base case because that's the mean right here. If the futures bounce from here, and there's a very good chance that we're going to go hit the 41.80 threshold, which is the mean on the 1 hour. If we clear the mean, then we're looking for a push into 4200 again. Right now, not really saying that's going to happen, but let's see 4180 clearance of 4180, then we'll look for a push into this number. That's according to 1 hour chart. This is the chart I mainly trade around. And let's go into 4 hour chart. All right, we can see now what is happening. Averages are still pushing down. It is still overbought here. So if it breaks below the 200, which most likely it will break below the 200. So let's see here. I think 200 is such a big moving average. So a bounce, most likely an ephemeral bounce back into 41.56. All right, that's what is happening right now. So it bounced off of that and hitting into its 8 again. If it stops here and then we start pushing down, if it breaks below its 200, then we're looking for a push into this number right about here, 41.30, something like that. But if it bounces from here, we are looking for a push into 41.66, which is where 5 is sitting. 5 on the 4 hour is sitting at about 41.66 or something like that, 41.66 to 41.70 range. However, looking at the technicals, the RSI, the average and average are still pushing down both on Heikin-Ashi and regular candles. And we're still seeing this overbought zone here, and the SMI is still curling to the downside. So we want to see another, perhaps one more push downside, and most likely we'll end up somewhere around here if we can't push from here. If we can push from 41.25, most likely we'll end up around here, 41.10 or something like that. But this is again the higher time frame. So this is not the chart that I usually trade by. I go by this chart, 1 hour chart. And now let's see what the daily is saying. And right. So One standard deviation was cleared and it was hitting the 50 moving average, 50 EMA, and it should have cleared that. It did try to clear that, but then it did not close above it. So if it were to close above it, then we could look for a second standard deviation about 4230 or something. Most likely, I was expecting second standard deviation to get hit, and I am still in the camp that would say that second standard deviation should get hit. Maybe not in a straight line, but my understanding is that we will get this number most likely tomorrow or day after, maybe, I don't know. Uh, so right now the rally is overextended. So we need to come back in. Why do we need to come back in? That's another question. So here is where it is right now, and you have a big gap down here. It has left its 5 on the daily. So this needs to come back, or the technicals need to come back, even if that happens somewhere around. So let's say the price comes back halfway through and the technicals push halfway through, we will meet around somewhere around here. 4120, somewhere between 4130 to 4120. So this is the range. Sorry, 41. Let's round it up. Let's put it a range because we don't really have all those tools which others might have. So let's put a range around 4125 to 4115. So let's make it a range. 10 points range, 4125 to 4115. That's the range I think the price will come down into, and the technicals will push into to meet up there. So what happens after that, we can take a look, once it is done. And again, to the upside, this is my, whoa, look at that. It just flashed a big sell signal. Right. So 4180 is my the base case to the upside, 30 points from where we are right now. And 4200 is my good to have to the upside. And to the downside, my base case is 4125. And then perhaps good to have would be 4044. Not really 4044, but let's see. 4125, if we break below there, then we're looking for a push into 4113. Most likely we'll break that, and then 4110. So yeah, 4113 is my good to have to the downside. If we break below there, we'll reassess the situation. And right here, the one standard deviation is sitting at 4130. My understanding is that if it starts to come back in, this is where it is headed. One standard deviation is 4130. If we break below there, then the 5 is sitting at 4082. Right now, not plotting any of that. I think 4125 is a good bounce spot. Let's look for that. Okay. Right. Okay. So now here, so if the markets were to be open, right now it is trading at somewhere where it closed, right around here. Right. So here's problem. Here's the exact problem that, uh, if you saw my note from the other day, so my understanding was that it cleared its, on the weekly time frame, it cleared its 200 moving average, it cleared its 5, it is hitting its 8. So if the markets were to open, the markets pushed above the 8, but my understanding was we will need to take a breather around 8 here. So if the markets were to be open right now, it is trading somewhere around here. So if it pushes down, this is where it needs to go down. 4109 is somewhere around that. We'll look at the hourly chart as well, but this is where it needs to find balance to make the next move higher, right? So about 50 points to the downside, and this is a bigger picture. This is not, this is not how I want to trade, but this is a bigger picture. 4100 is where I think it needs to come back in. Let's give or take 50 points to the downside. If that breaks below the 5 on the weekly, then we are looking for a push into the 100 moving average, which is sitting about at 4072. How will it get there? We'll look at Apple as well. However, this is the chart that I would be trading right about here, right? So what would have happened? Let's see what would have happened. Here, the markets were trading somewhere around here, right? The markets, if the markets were to open today, the markets would have been traded somewhere around here, and that would render the markets very oversold on the 1 hour time frame or the 4 hour time frame as well. So from here, the markets were trading here, then you would have come into this number as your base case, right? And then perhaps moved into this number, 41, 112 or something, right about here. So 5 needs to break, 8 needs to break, and I think this is a good bounce spot around 41.25 or something like that. Here, right about here. Then if that breaks, we are looking for a push into 41.10. 100 moving, a 200 moving average on the hourly, and it will need to come back in simply because the technicals have been elevated for quite a bit of time. So we need to come back in, see this number. If it bounces from here, well and good. If it breaks here, then we're looking for a push down into the mean, right? So somewhere around here. So that's not my base case. My base case with the downside would be somewhere around here, 41.25, 41.26, this range. And if we break below there, then this is my good to have, 41.10. Then if we break below there, we'll reassess the situation at 40.90 or something. Then we push down into the mean, 40.56. So good 100 points to the downside if the push down happens. How will this happen? Apple needs to push down. Will Apple push down or not? Let's see. But that's the math right now on the SPX. So again, this will change tomorrow morning, depending on what futures do. Most likely, I think the futures should. Right now, it's bouncing. Right now, the futures hit the 200 right about here and bounced. And till where will it bounce? Right now, it's bouncing. It bounced above its 8. If it pushes higher, then we're looking for a hit of the 5. Most likely push down from there. That's what I'm expecting to happen. And if the markets were to be open right now, the markets would have been doing the same thing. Most likely, come down in here by this time. The 200 would have been somewhere around here, 41.28 or something like that. So we'd be hitting this number, probably bouncing off of this number, and most likely we'll be hitting these dots and then push down. That's how I'm looking at things right now. And on the daily time frame, so my expectation were to be hitting these numbers, right? 40, 42, 13, 42, 14, whatever that is. So we should be hitting this number and coming back in. That's what is happening right now. So if it comes back in, till where can we fall? The 5 is sitting right here. No, that's not even the 5. So the 5, it left the 5 at about 100 points below, 40.52. And the mean is sitting below 5, which is about 40.36. Uh, the mean reversion will happen to the downside. I don't know. However, if it starts to come back in, this is the number we are looking for right about here, 40.82. Right? That's in a Bollinger Band that is sitting at about 40.82, maybe 40.75. Let's round that up at 40.75. So this is where, if push comes to shove, I think this is where it is headed. And if it enters this Bollinger Band, and then we are most likely good to hit the mean, 40.35, 40.36 number. However, it would not happen in a straight line. This is just the higher time frame. This is something that you need to keep in the back of your mind while trading. And this is how we took it to the upside, right? And we knew that 5 is happening, then the 8 would happen, then the inner Bollinger Band, then the mean would happen. If that clears, we're going to go hit this number. We knew all of this stuff. And it starts to come back in, and then there's the same exact math that will be applicable on the reverse side. Cool. Now let's see Apple. And this is the thing that will bring and this is a market mover, so we need to keep a very close watch on this. Let's see where All right, so Apple running hot, and I don't know where would Apple open tomorrow. Um, Most likely, if the markets were to be open right now, I think the Apple would have been hitting 151, or perhaps I don't know. Let's see, right about here, 152, or perhaps 8 on the weekly. This is where Apple should have been trading, most likely 153. 150, 350. This is where Apple would have been trading if the markets were to be open. And right now, if Apple starts to come back in, I believe that it will come back into this number again if it starts to push down 143.64 or something like that. This is acting as a major support, and if it breaks below there, then we're looking for a push back into 138. However, if it comes back in, this is the number that we want to be watching, 143.80. And to the upside, we want to be watching this number very closely. I think after hours, it actually pushed into this number 150, and it stopped there to a T. So if it crosses this number right here, then we're looking for a push into this number, 152. And this shouldn't be a huge resistance, although it's been forming from all the way till December. But I believe this gravitation, the gravitating towards 8 would be much better rather than it stopping here. I think if it comes to all the way till here, 152, then 153.50 would be, just a matter of maybe a half an hour or so. So 8, and then we have technicals telling us that, it is starting to curl up. SMI is starting to curl up. Stochastics have already curled up. So now the average stochastic needs to cross, which most likely will happen if if Apple can hold above its 5. Apple has to hold above its 5. If it breaks below from here, then we're looking for a push down into this number again, right about here. Right, so this is the bigger picture. This is the larger picture that you need to keep in your mind. Again, one more time, if Apple clears above its 5, then we are looking for a clean push into 152. If it clears above this super trend line, then we're looking for a clean hit into 153.50, which is the 5, which is the 8 on the weekly. And most likely, we will take a breather right about here, 153.50. We will get a breather here. If it pushes down from there, then we'll look for a further downside. But for now, looks like everything we are looking for an upside here. And on the daily, we still have 155 to get hit and all that stuff. For all of that to happen, it needs to clear this line here, right? So for anything to happen, it needs to move above this. Then we're looking for a clean hit into the 8. If it clears there, we are looking for clean push into the 50. And this is just how it works. This is just how the stock, whatever stock that you're trading, this is how just it works. Between the moving averages and the exponential moving averages, this is just how the stocks work. And algorithms and whatnot, they're right. They have to include all of this stuff. They might have a few more data points, or rather, they can include some other data points, such as the price divided by S&P, or whatever the other data points that they have when comparing the PE ratios, or when comparing price to book ratios and whatnot. Might have some more data points, but by and large, this is how exactly it has to work. And if Apple kind of touches this line and clears above this line, then you're looking for a further upside. However, if it starts to push down from there, 1 hour is anyways. Let's look at 1 hour. 1 hour looks pretty stretched here. So if it comes back in nicely around 143, 149.36, then hits the 8 here at about 148.60 or 70 and bounces off there, that's when we're looking for further upside. But if it breaks below the 8, and this will be a chop zone between below 8 on the hourly, and between 8 and 200 on the hourly, this will be the chop zone. So if it bounces above from the 8, then we're looking for a further push up. If it breaks below from the 200, we are looking for a further push down into the mean. Mean is sitting at about 145.30. So let's see if it can get there. Again, if it breaks below there, I'll be looking to short the entire market. But if it starts to push above, either from right here, the 200, then I'll be looking for a long in the markets right now. So as we predicted, market bounce off of that number right here, right? As we predicted, it bounced off of that number. It hit that 5 and starting to come down now. So this is where we can see that. But it's still not coming down. It's still in the pushing up. Hit the third standard deviation, started to push up. Give this doji 5.8, then let's see if we can get into this number here. About 41.66. If that clears, then the mean is sitting right around 41.69. Let's see if we can get there. 41.64 happened. Okay, so that's Apple, and this guy. This is another data point that everybody is watching these days, and this is very closely correlated to the Nasdaq. However, last week when the market was rallying, Bitcoin was left behind. Bitcoin wasn't able to rally as hard as we would have expected it to rally. But over the weekend, for whatever reason, it did rally. I have no clue why it rallied, but you can see where it can go further from here. I think this is just a breather somewhere around here, and this doesn't seem to be organic to me at all. This is just not organic. You can make a case that the technicals were getting stretched, then it was coming, it was pushing beyond that, but this just doesn't seem organic. It's been under the mean. Last time it touched the mean was all the way here on 5th of May. It touched the mean around 39, and now it's after 1 month or close to a month, it is touching the mean again. Now it is clearing the mean. So we are most likely in a risk on environment. If it comes back below to test its 5, it has left it 5, just like futures. The similarity between the charts is pretty decent there. Uh, just like futures, it has left its 5. So my expectation is for it to maybe take a breather, come down in, perhaps, or rather the technicals need to push up. And even if the average comes down around 31,000, right? If it comes down 500 from where it is, and technicals push up another 500 points from where they are, so we could look for a push into 3100 to the downside, and then perhaps a bounce. Ideally, I don't like to see this bounce. Ideally, I would have wanted it to come back in. However, the power of MACD is as such. This is where majority of the traders come back in when the MACD crosses. So most likely that's what we are seeing. And once you see this coming down, and then probably the MACD will cross to the downside, and those traders will get out. This so for now we can say that this is again back into that risk on zone. So I would not want to fight the trend at all. I would want to play exactly where the trend is going. We did that last week, and there's no reason to for us to kind of say, okay, the trend is reversing, and we'll go in the opposite direction. Absolutely not. I would want to trade this the way that it is trading to the upside. And here, this is what we knew was going to happen, and it happened. Now what? So I think it will take a breather and probably go back into testing this number around 31, and then we'll come back and test this number again, the 5 on the weekly, and most likely this time we cross the mean and probably push into the 21. And if sorry, into the 8. And if this happens, if this trajectory continues, I would be looking for a buyer of the markets, and I'd be looking to get long probably in the entire market, and especially beaten down tech. Now, what is beaten? I put out the note, I think this evening or last evening. So, what is beaten down tech right now? Most likely, names like Snow, Zscaler, Crowd, DarkQ. What else? What was that? Uh, Datadog. Those are the names that if I can find a trade in there, I will be looking to trade that. Crowd is one of the ones that I want to be trading. Tomorrow, I think they have earnings. Is it true? Yeah. Aftermarket, they have earnings. So most likely, I'll be looking to get involved in Crowd in the morning itself if it comes back into this number. Right. So it is. So most likely we will get this entry, but I would not push or I would not force any trade. And if the markets were to be open, right. So for the 15-minute chart, it is coming down, and it wouldn't surprise me if we can come back into this number here and probably push into the 8 here, right? And here's where the upside, this is where I'm trying to push it into a 171. And if we can clear this 170, 170, or what this 200 moving average, let's round it up at 172. If we can clear this up, then we are clearly looking for a push into, where is that number? Right about here. 178 is what I'm looking for. Right, so we will get this. We have the technicals on our side, and most likely we will get that number. And so Zscaler, I want to see what Zscaler did. And however, if this is what is happening right now. Right, so it hit this line to a T and came back in, and most likely it will go test that number again. If it clears there, then this is the number that we're looking to hit, 175. And most likely we'll get that number. It's just a matter of time that if numbers are any good, any bit of good news, we push crowd into that range here. But but earnings, I'm not really keen on playing the earnings as such. I want to play the premium appreciation. That's what I want to play. So depending on where crowd would open tomorrow, I would likely buy calls, and towards the end of the day, I'll exit that position. Or if I am in profits with that position, probably I'll exit most of my position and leave the runners, which is profitable. So, or maybe less risky, right? So I'll leave those runners to the upside and probably get out. Or if I made my profits, then probably I'll put on a straddle. Straddle meaning that buying puts and calls for the same strike and same expiration. Most likely this week's expiration. That's what I'm going to be doing. But after the crowd earnings, I can play differently. Probably I'll go into strangles or something after earnings. But for earnings, the game plan is to get that premium appreciation right in the beginning of the day, and then probably if I'm profitable on my trades, then I'll look to put on straddles on that. And one notable thing before that, let's get into Zscaler here. So this is exactly what I'm expecting this thing to do. What's that name? Crowd. This is what I'm expecting crowd to do. So I think Zscaler is also in the same industry group as V2E. So Zscaler is also, I believe, I think, what do you call that? Security, right? Zscaler is also into security software and whatnot, and I'm expecting. I think Crowd is also in the same business. But the only thing with Crowd is you need to be watching Amazon as well, right? If Amazon starts a pump, then Crowd will start to pump with it, because Crowd is one of the vendors with Amazon, security vendor. So if you're a customer with AWS, one of the security providers Amazon provides is on their network is CrowdStrike. So Amazon, one of the revenue channels for Crowd is Amazon. If Amazon starts a push, and then Crowd will go along with it. And from Amazon's results, last quarterly results, AWS was doing better, right? Even though the cloud was slowing down, but AWS was doing better. And I'm sure that Crowd is also a vendor on. It's also a vendor for Azure. So Azure was doing okay there. So Crowd, I'm expecting good results from Crowd, and I'm expecting Crowd to push at least into this number, 179 or something. So I'll be keeping a close watch on that. What is that right here? This is the number, right? Crowd. This is the number. So the base case for Crowd is to hit this 169 or something, and then we're looking for a push into this number, 177. If the results come in better than expected, then I'm expecting a hit of mean on 186. 200 points move on crowd is pretty much nothing compared to what it used to be. See that all the way from here, it pushed into all the way from 230 or something. So it's doable. It's doable for crowd. So I'm expecting that to happen again. Here the numbers were pretty decent, and I'm expecting them to repeat the same numbers again. Most likely we'll capture that rally again. All right. So next, VIX is not current, so we can discuss VIX but just let's take a look at VIX. I don't know where the VIX is trading right now. Most likely, given the given the pump the markets today, most likely VIX kind of came back in and probably hit this number and pushing up. If not, if VIX opens up where it is, then this is the number I'd be looking for VIX to push in. 2475. However, and the general direction for VIX is to come back in. The general direction for the VIX is to come back in. Stochastics are moving down, and we still have the SMI just starting to curl back in. So it needs to come back in. And my understanding is that VIX will continue to come back in. And as per our theory, that even though it has satisfied that theory here, that it came back and tested the lower inner Bollinger Band and pushed off of it. However, it did not do that here. So my expectation for it is to come back in to test this number, 2480 or something like that. And if it breaks below there, then we're looking for a push into 2360. However, not looking for it to happen in a straight line. My chart is the 1 hour chart. This is where I will go to look for anything. So most likely VIX might have pushed all the way down here, 2520, something like that. Now it is bouncing off of that number. And if VIX kind of pushes into this number here, 2588, and then most likely 26, and if it can clear the 8, then we're looking for a push into the mean around 2670. And looks like that's what is happening. The average is starting to kind of come back in. And if you are looking at technicals on the Heikin-Ashi side of things, which is the average, this is a much clearer picture of what is happening. So we'll look at VIX when it opens tomorrow morning. All right, FB, Walmart, Microsoft. All right, let's get into. Oh, before we get into that, this is another data point that is important. US 10-year. So you don't really have to, have all of these data points with you. Anyways, I'll keep updating everything online throughout the day on voice. However, just to give you an idea of what we are looking for. So right now, the 10-year is kind of getting overbought on the lower time frame, 1 hour time frame. This is the chart that I understand. So my understanding is that it needs to come back in, test this number here, and 2.82 or something, then most likely by the time it comes back in, I think the 5 would reach up here, and then probably will bounce off of this number, 2.83 or something. That should, I'm not expecting it to come back into the mean and 2.76 where the mean is sitting. I'm not expecting that to happen. But if it, in fact, it does break below the 200 here, then we're looking for a push into the 8, about 2.81. Right now, that is still okay, a good number, as long as it doesn't, push beyond the mean here, or this is where we were started to push back up from 2.71. Still okay. It's still not a terrible number, but still, we don't want to see this thing coming down. We just don't want to see this coming down. However, if it starts to come back in, and then the tech, as of now, will rally. Right. So as the 10-year rate comes back in, tech will continue to rally. So that's what I'm looking for. If it comes back in, we'll look for the continued push up in Apple and the markets. And if this starts to push up into 2.87 and then perhaps into 2.89, we'll look for the rally to kind of slow down a bit. So that's what I'm looking for. Most likely, this will come back in and probably bounce around here. Right? So there's a good chance that it would come back in and bounce around here. Let's keep an close eye on that. Even right. So here, my expectation is from it to look for this 200 right? And it needs to come back into its 8. So about here between 2.82 to 2.81, I'm looking for a bounce. And after the bounce, I'm looking for it to continue this trend to the upside and push into 2.88. This is where the mean is sitting. And then we'll clear the mean and push into 2.93. This will clearly put brakes on the rally. So this is what we're looking for. As you see this thing moving up, this will put brakes on the rally, and then we go short again. That's how that needs to play out. Okay, and now let's jump into Microsoft. Microsoft is one of the ones that I would be looking to play to the upside if it can clear this number right about here where it stopped. Right? Just like the market stopped at 8, it also stopped at 8 weekly, and if it clears there, then we're looking for a clear push into 282. And if it kind of bounces into this range, then we're looking for a clean hit of the mean, about 288 or something. But it would not happen in a straight line. Till here, it was a clear trade. 5 and 8. From here, it's going to be a tough trade into 283 if we can get there. And let's see how that works out. However, let's go here. Right. So most likely, if the markets were to be open, we would have probably hit this number 2.77, and probably then we would have come back in. Today the market was closed, so most likely we were trading exactly where we are trading according to the futures. The futures are probably about 4 points from where we closed, so I'm expecting expecting all of these trades to be happening around here. If it comes back in, then this is my base case right about here, 270, 58. Then if it breaks below there, then we're looking for a clean push into 266.76, which is where the mean is sitting. That's the downside. If it breaks below there, then probably we're gonna get into the 8, about 264. I'm not really plotting anything there right now, but if it pushes higher, then this is the number we are looking for, 277, and then most likely 282, 283. And an upside trade is pretty clear for me right now, rather than the downside trade. However, this is not the chart that we trade on. This is the chart that we trade on. And all of these numbers are subject to change tomorrow morning, depends on where the futures would open, or rather where SPX would open, or there rather, and where would the VIX be in the morning. So right now, if the markets were to open, I'd be looking for a push down into the 5, into the 8, and then most likely into the mean, 268.59, and probably a bounce of here. And then the bounce most likely would end up here, 271 or something. Then we push down into this number, 265. This is how I want to play this game. So the Microsoft would be played between this range, to the upside 275, 275.60, and to the downside the mean 268. So this is the range that we want to be playing this trade in. So if you put a strangle, you can make it both ways. If you put a straddle, and if you can exit trades in a timely fashion, then you can make money on that one as well. However, I'll be looking to trade this thing actively tomorrow, not a passive trade, active trades. I'll be looking to trade actively both Crowd and Microsoft. Most likely, I'll stay away from Apple tomorrow, and yeah, Microsoft and Crowd. Those are my main targets tomorrow. And as a sympathy play, I would most likely be looking at Zscaler. Let's look at his book. This book is one of those trades that this doesn't have any direction as of now. This trade doesn't have any direction right now. So this is just going by the market. Whatever the market is doing, this is doing the exact same thing. However, if you look at the monthly chart, this is what needs to happen for that. 171, 172, whatever this number is, it needs to come back into this number and test that. It cannot happen that it just came back once and tested and gone away. It needs to come back into this number and test that number, and then probably push above into probably, I don't know, let's see, about 220 or something like that, wherever this is sitting right here, 28 or something. But not really looking to push into that number as of now. I would want to see this happen. I would love to see this happen about 170 to 50 or something. This would give me the confidence that it's still in a good shape to push to the upside. So if here is a super trend, right? The previous super trend is sitting here. If I extend that line to here, 206 is still to the upside. So and this is the range that I want to be playing in: 206 to the upside and 173 to the downside. This is the range. Most likely, I'll be playing Facebook. And in fact, I am not really touching Facebook as of now, because my theory on Facebook that it was particularly vulnerable to the downside. Many reasons for it. First, the technicals, and then you also have the warning from Snap that digital ad revenue will take a hit, and most likely it will take a hit. And all of these names, Twitter, Facebook, Snapchat, Pinterest, uh, I don't know, there are a couple of others. Those all will take a hit, right? Even Amazon and Google. So those all will take a hit if it is expected that digital ad revenue is coming down. So all of them will take a hit. I don't know what's the pump about. So that's what I'm saying for Facebook. Just because the market is going up, this is going up, and a slightest bit of push down in the markets, it will come back in. That's how I want to play that. Walmart, I don't want to be touching Walmart right now, other than a trade. Um, it came down. Yeah, people are getting into it. Fair enough. It is hitting all of these. It did hit all of these, major moving averages here on the monthly, and it is pushing up. Fair enough. But I would be trading, not holding this trade. I would be just simple a trader of stock. However, looking at it, 124 closed above there. So most likely, if it starts to push, depending on how far, let's see, Walmart. Right, so here, this is the line that I'm watching, right? So if it continues to the upside, then we're looking for a push, clear push into this number right about here, 133. So give or take a good $5 on this. And if it enters this zone, then we're looking for a push into this 138. $10, $5 from where it is right now, and then another $5 to the mean. This is on the daily side of things. There's enough ammo for it to do that. But bear in mind that it did not guide well, and most likely those numbers will come down. Just bear that in mind. And I don't know how the next earnings season will play out, but this is a good stock to buy here if you're a long-term holder. And this is a good stock to buy and hold for like 20, probably another 5 to 10 years. Nothing wrong with that. Walmart will keep adding to its market share, most likely from other major retailers, and this is actually pushing. This is a good stock to own even in recessions. Right? This is a consumer staple story as well. So, and the lower end of the customer will still keep on, uh, coming to Walmart. It's not a Target store. Target is usually consumer discretionary, so people there have, where when people have money to spend, most likely they'll go to a store like Target. But when people needs to spend less, they go to a store like Walmart. And the same story would happen with something like a Burlington, something like a Ross stores, something like Marshall. So we could look into the retail space there, just like that. And the people will kind of start to cut back on your Nordstroms or something like that, and go back into stores like Ross and maybe others. So keep a lookout for that. All right. So there was one other data point I wanted to talk about. Missing something. Okay, oil. This is something very interesting. The story is getting very interesting. Now I think I want to get involved in here. I was trying to stay away from oil because it did not jive well with my thought process. So I was trying to stay away from oil. Looks like oil. maybe we will come back into this number right about here, 113 or something. Then after that, I think there's a major push coming from oil, unless there are a lot of opposing forces actually working on oil right now. One is that the Fed wants to, rather the government, or rather the West, if you want to cumulatively call that that West. So West wants the oil prices to come down. Pretty straightforward. And right now, Russian oil is pretty cheap, right? So how does that get resolved now? Uh, West is, of course, major major user of fossil fuel. So you cannot really go off the fuel fossil fuel just by switch of a button. So now 90% of they're planning to kind of do away with 90% of Russian oil. That Russian oil will probably move into Asian parts of the world, and perhaps I don't know. Yeah, majority of their customers would be Asian countries, including India and China, large consumer of fossil fuels. Now, what would happen? Fuel price would come down there. There would the demand or whatnot. Now supply side of story is the oil will go offline for the West. So somehow you need to compensate for that fossil fuel now. I don't know where that fossil fuel is going to come from, but now the demand part of the equation needs to somehow the demand needs to be slowed down now. If you know what I'm trying to say here, the demand side needs to be clamped down now. That's what needs to happen for oil, for some equilibrium to be maintained, uh, because you are short of oil right now in the West, obviously. So the demand needs to come down. Now, how do you put the demand down? Um, I don't know if that will, if just by raising interest rates would work on that kind of equation, where you want to, probably do away or lessen the demand for fossil fuel. Uh, that will have negative effects as well. If you do that through interest rates pushing up, so that demand destruction starts to happen in the West, and once the interest rate starts to rise on the dollar, so I think the dollar will start to keep rising, and that will also work in the favor of emerging markets. So I don't know how the Fed is going to tackle with all of this stuff, and within the limited resources that what we have here. So I think Apple, it's not Apple. I think the demand for fuel will need to somehow they need to clamp it down. If not, this thing will most likely keep pushing, and most likely, I think, let's see the chart here. So monthly chart is still okay. I think this is where it is going, 134 or something. I don't believe it's going to come down. Even if it comes down, probably it will hit this number and start to push up again. So watch for this. Right, and this time it is not speculation. This was speculation, by the way. Right, this was speculation and it came right back in, and this is not speculation. This is real pricing now. So unless somehow the demand comes down, this will not come down. This will keep pushing up. So look for that, and most likely I'll start to get involved into energy stocks, uh, probably this week sometime, starting with probably the bigger ones, Exxon, Chevron, something like that, and probably ease my way into I don't know, some other ones, the low beta, no, high beta, the smaller stocks with high beta, something like a CPE or VLO or something. I don't know if VLO is really high beta, but yeah, something like that. All right, so yeah, that's my game plan. And if anybody has any questions, comments, data points, or anything that you want to discuss, go ahead.